Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing about the rollover for Nifty, which happened in trade yesterday, as well as the key levels for Nifty and Bank Nifty. We'll also be discussing about the main sectors in focus in trade today, as well as for the next few trading sessions. First up, coming to the rollover data. So in trade yesterday, we had the monthly expiry for Nifty. So let's just briefly discuss about the key highlights for the July series. In the July series, Nifty future has traded in a range of 772 points. During the last 17 trading sessions, if we see, the index has either opened with a upside or a downside gap in 11 trading sessions, highlighting the market's significant volatility even though the index traded in a tight range. Despite the high volatility, the index has reached a new all-time high of 24,854 before experiencing profit booking. If we come to the rollover data, so the rollover for Nifty index futures was lower at 69.69 compared to previous months of 76.25 and 3 months average of 72.57. The number of shares rolled declined to 137 lakhs compared to 151 lakhs last month. Moreover, the rollover cost has witnessed a minor dip to 0.21 as compared to 3-month average of 0.4. In the July series, the monthly expiry for Fin Nifty and Bank Nifty is scheduled for the upcoming Tuesday and Wednesday respectively. However, as of July 25th, the Bank Nifty rollover stands at 61.97. If you look at the market-wide rollover, that stood at 92% compared to 90% last month. In the latest series, the long-short ratio based on FI index position has shown a notable downtick, which is currently at 56.75, the lowest in the last couple of trading sessions. If we come to the option chain data, that is for the next weekly series, notable call open interest is observed in 24,500 followed by 24,700 strike, while on the put side, if we see, the open interest is concentrated on 24,400 followed by 24,200 strike. Coming to the seasonality data, so tracking seasonality over the past 17 years, August month has often exhibited a mixed trend for Nifty. So on 8 occasions, the index has concluded on a positive note with an average gain of 3.73%, while on 9 occasions it has ended on a negative note with an average cut of 4.45%. Overall, the average returns for the August series has been minus 0.6% for Nifty. Over the past 17 years, August has consistently shown an average volatility of 7.66%. Historically, Bank Nifty has also shown a mixed trend in August in the past 17 years. So out of these, it has closed positively 9 times with an average gain of 3.57%, while ending negatively on 8 occasions with a cut of 7%. The average return for Bank Nifty in the August series has been negative 1.4%. However, Bank Nifty has demonstrated an average volatility of approximately 10.98% for the past 17 years. Now coming to the sectors that are expected to outperform based on the rollover data. So pharma, healthcare, IT, automobile, oil and gas, FMCG, CPAC. So these are the sectors which are showing positive trend as well as positive rollover data. Sectors that are expected to relatively underperform are private banks, financial services, metal, PSU banks and realty counters. Now coming to the technical data. So currently the index is trading, if you see, is trading above their short-term and long-term moving averages, which is still a bullish sign. However, the weekly and monthly RSI is portraying a different picture as it is in the overbought zone. So we have the monthly RSI which is currently quoting at 79.98 level. This clearly indicates that the market is likely to witness a sideways momentum in the next couple of trading sessions. Talking about levels from a slightly positional perspective, the zone of 24,000, 23,950 will act as the crucial support for the index. If the index slips below the levels of 23,950, the next positional support is placed closer towards 23,700. While on the upside, if we see, the zone of 24,650 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,650 would lead to a sharp upside rally towards the mark of 24,800, followed by 25,100 in the short term. So now talking about Bank Nifty, so the benchmark index Bank Nifty has underperformed the frontline indices since the last couple of trading sessions. As if you see as month to date, it has down by nearly 3%. Currently it is trading below its 20 and 50-day EMA levels. The momentum indicators and oscillators are also suggesting bearish trend in the index. The daily RSI is about to slip below the 40 mark. Further, if you see, the weekly RSI slipped below its 9-day average as well. These technical factors are indicating bearish momentum for the short term in the bank index. Talking about levels, the zone of 50,500, 50,400 is likely to act as a strong support for the index, as 38.2% Fibonacci retracement of the prior uptrend, that is from 46,077 from where the index went towards the upside towards 53,357. So if you take the Fibonacci retracement of that, 38.2% Fibonacci retracement comes closer towards levels of 50,400. So if there is any sustainable move below the levels of 50,400, that could lead to a bit of further selling pressure in the index towards the levels of 49,600. On the upside, if we see, the 20-day EMA zone, that is the levels of 51,900, 52,000, will act as the major hurdle for the index. Any sustainable move above 52,000 will lead to resume its northward journey, and in that case the index is likely to test 52,800 followed by 53,500 in the short term. That's it from my end. Thank you for regularly listening to our podcast. Wishing you all a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.